Good morning and welcome to the Leadership and Insurance Podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Matan, who is CEO of Armadillo. Hello, sir. How are you?
Good, Alex. Good to be here.
Good. And I did mention this off air, but I think it deserves a mention anyway for people listening in that you have the best array of armadillo pictures behind you that I've ever seen.
We really like armadillos here. We really like armadillos. It's a new installation. This happened a week ago.
Oh, did it?
Yeah.
See, that's why I should have had a cooler name for my business. Like I don't. You can buy pictures of fin pros. I don't even know what they are. But look, before we dive into it, we know what armadillos are. But for those people out there that don't know you and don't know the armadillo business, if you'd be kind enough to explain what it is you guys do, that'd be great.
Yeah, Matan Slagter. I'll start with myself. I was born in the insurance industry. One of those very familiar stories that you'll probably hear all the time. My father was an insurance agent. He was for a little bit. I started my career as an actuary. I worked for a reinsurance company, SCORE, pricing blocks of life insurance business, like thousands of life insurance business. We would reinsure those. And I then moved over to what people back then called the dark side, P&C, which I think it's the opposite. P&C is the bright side. It's awesome. So I joined AIG, spent about a decade there. I did a lot of different things at AIG, all the way from actuarial to underwriting, operations, strategy, and ultimately innovation. My last stint there was as head of market disruption of all of the consumer-facing lines of business. So that includes personal lines, auto, homeowners, accident and health, travel and warranty. And while I was doing that, this was a little while back at the precipice of InsurTech. Met a lot of very interesting startups, and I knew that at one point I would probably leave AIG. I was getting more and more comfortable, but I ended up making the leap a little bit over a year ago and started Armadillo with my co-founder Lanston Robbins. And what we do is we are a new entrant into what's referred to as the home warranty space. As much as I personally would change home and warranty and call it something else, but for now we'll call it home warranty, the home warranty space. And what we're doing is we deliver a product that essentially is the combination of financial protection and service delivery for homeowners. We provide financial help when things break down, and those things are HVAC, air conditioning, heating, plumbing issues, electric issues, all the major appliances. If anything breaks down, we actually provide the financial support to repair or replace. And we also have a network of technicians across the US. We operate in the US that we can send to someone's house if they would like to use our network. So it's a pretty cool product. And we entered it because we felt like this industry needed a more homeowner-centric or consumer-centric offering. So that's us.
Awesome. Thank you so much for that. I really appreciate that. And I love the born into the insurance industry. I think it's one of those things that it goes back to kind of somewhat. I was at an InsurTech event, as I mentioned to you last night, and we were saying that the industry doesn't probably do enough to kind of draw people into the industry, because the difference between how much of an interesting business it is versus what like people have no awareness of it think is quite dramatic. Like I love films, and every film where there's a boring character in it, they're always like a life actuary or a claims guy. It's like that's literally like the default go-to. It's like, oh, we'll make them an actuary. If they want them to be sort of smart and moderately wealthy, but not interesting. That's always sort of the go-to. And we need to do more to change that. I don't.
100%. 100%. One of our VP of Insurance and Partnerships, Liv Kaufman, who's absolutely incredible. Me and her, we talk about this. How underrated the industry is, like insanely underrated, and people just don't get it. And even I started my career on the carrier side, and I didn't have an appreciation to the broker, like how dynamic the insurance brokerage space is. So even within the industry, you have these different parts of it. The MGA, the program administration, MGU, MGA space, super dynamic. And, as complex as you want it to be, you can really focus on pretty interesting lines of business. I'm totally with you. And me being an actuary, so my father, when I was in high school, said, "Hey, you're pretty good at math. There's this job, actuarial science, that's rated top 10 every year." And I just listened to him, and I started taking my actuarial exams, but I didn't have any, I sort of came into the industry without any preconception, and just luckily stumbled into it.
Yeah. I mean, the same. I've told this before, but I literally came out of college and we just happened to have a really big insurance carrier in our hometown, so they had an open day. I didn't have a grand plan, and also I was terrified that I'd really failed at my degree, which was close to the truth. So I thought, if I get this job before my results come out, then I can say, "Oh yeah, I think I'm predicted a really good grade," and I got into it, and it's been it. I've been in and around it ever since, and I've enjoyed it. I mean, like the last couple of days have been in the InsurTech Insights event, and I was telling you, so many different people it's the international nature that I find so exciting. And I spoke to an InsurTech from Azerbaijan yesterday. I was like, okay, didn't know there was a, and that's exciting to me. And I think we get wrapped up. We need to do better press for it. So, but anyway, before we start that campaign, I want to bring it back to you. You've had this really varied career in insurance. You've done life, you've done P&C. Within P&C, you've done kind of multiple lines of business. Why warranty, I suppose, was my question.
It's a good question. I'll tell you why I fell in love with warranty. It's a people thing more than a line of business thing. That fundamentally, if you look at the math of warranty, even though warranty is not insurance, it's in the US, it's a service contract. It's not regulated the same way a contract of insurance is regulated. Fundamentally, there's a frequency, there's a severity, there are actuaries involved. Well, when there are actuaries involved, there's insurance. But fundamentally, it's similar in that way. I fell in love with the people. So AIG acquired a company in 2011 called ServiceNet. It was an extended warranty business. So if you went into Best Buy and in the US and bought, a Whirlpool appliance or something, you could get an extended warranty on it. And that was that business. And AIG acquired it. The founder of that business, Lanston Robbins, or one of the few founders, but Lanston Robbins is now co-founder in Armadillo. I didn't know him back then, but I worked very closely with ServiceNet after it was acquired by AIG. And their offices were in Louisville, Kentucky. And I was just fascinated by the people, fascinated by the business, by how entrepreneurial they were, even though AIG acquired them. So I've maintained that, just very tight focus on business and what's important. And I worked very closely with them because when I was the head of market disruption at AIG, they would bring me in to big clients to tell those clients, look, we're investing in innovation. AIG is investing in innovation, because it's something that clients were at that time, between 2011 and 2020, were really caring about. So I would travel with them. I got to know a lot of folks from that business, and I just loved it. So I was getting closer and closer with them. And when the opportunity to look at specifically home warranty is a broad category, but home warranty, pieces seem to line up. You like the people, you get Lanston Robbins to say, I love the idea. I like you, Matan, let's do this together. We have the relationships to get 2 carriers to underwrite the program. We have, things were lining up. So, to me, it was the people and the ability to now build a business from scratch. It could have been a different business. It could have been a different line of business. But if it was, it's how things lined up that sort of pushed me in that direction. So I'm not one of those entrepreneurs who will say to you, hey, I'm born and raised thinking about home warranty. I do. Now I wake up in the middle of the night thinking about him, I'm so to speak, obsessed with it. But it was more about the right time and the right folks being involved and the right support structure for an entrepreneur to leave a company like AIG and start something new.
Yeah. I was going to say that it's a big leap of faith. I mean, we talk about it all the time. I'm either talking to people that want to do something more entrepreneurial, join a startup, and it's a big it's a difficult conversation at home is the thing that comes up quite often. It's like, yeah, we're going to leave that really comfortable, well-paid role, and then we're going to go throw our hat in the ring with this smaller business. But no, I totally get it. Just to clarify something for me, which you touched on. So presumably you don't have the state-by-state constrictions of another class of business because it's not considered a traditional insurance. Am I right in that, or do you still have the kind of
there's still regulation. There's still regulation, and that regulation varies by state. In some states, it is regulated by the DOI, the Department of Insurance.
Mm-hmm.
Others, it may not be. So it's state by state specific, but overall, it is. For an outsider coming in, there's still barriers from a regulatory perspective. From an insurance person coming in, seems much lighter touch. So, I put it's like in between. Middle there, but you don't have to. In some states, you file the product. In some states, you just let them know what the rates would be. But really, there's no. If we needed to change the rates on the product, in most states we can just change those rates without filing new rates. So there are certain benefits of building this program because you have more levers and you can move more quickly if you need to remediate the book of business. There are definitely benefits.
Yeah, I wondered if that was part of the appeal because it allows you to scale quicker, presumably, and particularly at that stage where you're at, so like you say, tweaking that product. That's one of the things that slows people down, particularly in the States. And we've got loads of insurtechs over in the UK and Europe that love to get to the States. And getting over that regulatory hurdle state by state is pretty much what stops everyone. This figure I think either comes from you or your website, so I can't claim benefit for this, but do you find it surprising that the warranty market apparently has only 4% penetration, considering the amount of money that we spend on technology in our homes? And I suppose following that up, as a second part is like, what do you think this says about people's relationship with insurance?
It's a tough question because home warranty is not perceived as insurance, I don't think, by consumers. No. So I don't think it says much about our relationship with insurance per se. You look at homeowners insurance, you look at auto insurance. You get a new house, your mortgage broker will probably require you to have homeowners insurance. Yeah. You need to have auto insurance, and if you don't, it's frowned upon, and there's uninsured funds in different states to support accidents when someone is liable but they don't have insurance and stuff like that. But home warranty is not required, and it tells you more about that penetration rate tells you more about the distribution channel through which it's sold and the value of the product than it does about insurance more broadly, I think. There are other part that would distort that 4% is that a lot of people have a lot of technology and they get extended warranty. So we said before, you go into Best Buy, you buy something, you buy a new computer, a new system, connected home, you might get an extended warranty on that system. Home warranty is like covering a blanket of things. So the penetration is much higher for technologies in our home. So that 4% is more of a specifically for a blanket coverage for all the things in your home. That's what we're seeing in the market today. We look at it as a huge opportunity because we think it's an incredible product. We think we created specifically a categorically better product than the current home warranty construct that's in the market. And you see a lot of people as a result of COVID buying homes, a lot of first-time homeowners who don't know how much it costs to maintain a home. I think the statistic is like 1% of the home value every year. So if you bought a $300,000 home, that's $3,000 a year on maintenance on average. So we think it's an incredible product. We think it's a great time. So I can't tie too much to our relationship with insurance. We can talk more about the relationship with insurance because I have a lot to say about that. But
yeah. Well, that leads us quite nicely into the follow-up question, which is, do we need to help people fall in love with insurance? This is my thing. I think I've stolen this from Nigel Walsh slightly from Google, but do we need to help people fall in love with insurance? How do we do that? Because I don't know if they see its value, because I don't think insurance has done a great job at showing people what the value of insurance is.
So first of all, I think we need to make people fall in love with insurance as a profession, which you and I talked on before we went live.
Yes, we do.
That's a big, yes, huge underrated area and all of that. But I don't think people need to fall in love with insurance in the sense that, so like look at Trove, the company, mm-hmm. Trove. When they started out, they created this thing that said, turn on my insurance on and off, like as high engagement as engagement gets, which I think is ridiculous between us. But I think as a consumer, we don't want to make people think about the risks all the time. We just want to make them feel secure in the fact that their insurance is going to have them covered when the time comes. Because you're paying an insurance company up front and you're paying them. And let's say it's homeowners, there's one claim every 6 to 8 years, or if it's life insurance, one claim in your life, that better deliver for my family, right? So, yeah. And that's why regulators have come in and said, insurance companies, we need to have these regulations in place so that you're very well reserved, so that you deliver, because you're charging up front and you're making a promise. So I think it's more about making consumers feel secure. I get the digital wave of selling insurance online, but I think the independent broker, the role of the independent broker is that much more important in a world where every person, and I'm not even talking about business insurance, of course, it goes without saying that a broker, someone who understands risk, a risk manager, is more than required. But even for an individual in a world where people live different lives, some people are digital nomads, or people who love to hop from one Airbnb to another. Other people own a home, other people rent, and they have different lifestyles and different things. A risk manager that can tell you, this is the portfolio of tools that you need to reduce your downside risk. Some of it might be insurance, some of it may not be insurance, some of it may be like, don't go and parachute off of a plane every week, because that's not a smart thing to do. But it's I think it's more about being secure that you have the right coverage, because insurance is a complex thing, and the complexity comes in the contract that you receive, because most consumers are not going to read that contract. There are exclusions, there are specific definitions, and a broker, who I wish we could just call a personal risk manager, my personal risk manager, right? I like that, and I think it deepens the relationship. They read those contracts, they understand them, and they can really advise on what everybody needs. So it's less to fall in love. I think people should fall in love with their Apple computer and technology and their Netflix and all that. I get that. But with the risk, I think it's more about just having a peace of mind. But that's, it's just my view today. I get it. Maybe there are certain types of lines of business. Home warranty is different. What we're doing with home warranty is different. It's a lifestyle thing. It's a hassle-free. We are all about hassle-free homeownership. Something breaks, here's a magnet. We literally just printed these out, put it on your fridge, you scan the barcode, you can request service very quickly, single source. So there's a convenience thing. You can talk about that. That's, 100.
But that's, but I think that's interesting, because when I think about insurance, obviously different types, different reasons, but most of what I'm looking for is I'm very fortunate. I don't have a lot of financial pressures. I'm not extravagant, don't have children, so I have less financial pressures than some people. So this comes from a position of privilege, but I'm not really worried about the sort of reinstatement. I just don't want the hassle of, if someone crashes into my car, I want a car as quickly as possible. That's all I want. And a bit like, if something happens with my home, and I need to call on my home warranty, and the service person needs to come out, or it's the hassle-free nature of it that I think will make people fall in love with things. It's like people fall in love with Amazon Prime. Totally. And it's a delivery service. It's just the best delivery service that we've experienced to date. So therefore, we kind of, I think, I do always think love is pushing it a bit as well, and there's been a lot of kind of branding on, well, I don't want to pick on the big guys because they've had enough of a kicking in the public markets, but but people have made it more appealing to engage with your insurance business, and places like Lemonade have absolutely done a good job on that, ignoring the fundamentals. But like that, I don't think that's what people consider important. I was speaking to Ben from Honeycomb Insurance on a podcast I've just recorded, and he came up with this great phrase, which is that insurance doesn't have to be your drinking buddy. And I followed it up with like, no, it needs to be your designated driver. And it's, and I was like, I think we were onto something, because I think all this desire to make people fall in love with things it's a safety net. It's supposed to be there at all times to kind of keep you safe. It doesn't have to be something we fall in love with. But I think something you were speaking to is a little bit about education, because that personal risk manager thing. I mean, like, you've worked in insurance for over a decade. Do you read all of your policy documents? Have you gone through your wordings?
I'm ashamed to say that I don't. And that's actually crazy. Sometimes I do, and it depends on like how interested I am in the product from not as a consumer, but as a professional.
Yeah.
But even I don't. I don't think I read my homeowners policy on this home that we're here right now.
Really? Yeah.
And I totally agree with you when it comes time to file a claim, whether it's I just crashed my car, it's not, I can't drive it, I need another car very quickly, or my home is not livable and I need just need money to move to a hotel temporarily. And it's how you deliver that. I totally agree that they're that sort of just matching the sort of experience that the consumers expect in other parts of their lives.
Yeah.
And I love that saying that insurance doesn't have to be your drinking buddy.
Yeah, I know. We were quite pleased. We were quite pleased with ourselves on that podcast. It's going to come out soon.
Trademark.
Yeah, I know. I might get onto that. I want to jump a few things. I love what you've done with the design of the website. Even the choice of name, Armadillo. But the clarity of your message, I think, on the website has been really interesting. I think it's really easy to understand. Do you think that's going on from this kind of conversation, do you think that's some of the challenge? I mean, we were just talking about wordings, for example, on policy documents. Has that been an issue and I suppose, is that solvable, do you think? Because regulation obviously has a large part to play in that as well.
Yeah, I think clarity of what a consumer is getting and not getting is always going to be an issue that we continuously try to solve for. And I think home warranty is a relatively simpler product. So in the context of home warranty, we have the luxury of being able to just say, these are the things we cover. We did do a lot of work, to be fair. We did do a lot of work. We removed a lot of exclusions that all of our competitors have in their contracts. And our product is a little bit more expensive as a result of that. But we thought that was important because a lot of those exclusions are what led to consumers are just not happy after it declined or for claim or whatever. I think there's a lot of work to be done on education. I think most consumers don't want to be educated that much. They want to be sort of told what's right for them. So it's how do you do that in different lines of business? We took extra care with our website. I have to say, my wife, who's actually at home right now, helped us a lot with the writing there, and we have a few other very talented people who did. But we spent a lot of time on the website and specifically the copy to make sure that the journey that a consumer goes through as they go through our website is very clear. They know what value they're getting and why this product would be great for them as homeowners. But it's a challenge. Commercial insurance is a scary one. We have a bit. So now I'm on the other side. I have a business, Armadillo. I need to insure the business and insure myself. So I have Keyman life insurance on my own life, and I have all this general liability and different D&O and types of insurance for Armadillo. And that to me is also an area. That's where education is important. That's where me as a CEO or our CFO need to take time and really sit down with a broker who's going to really understand our business and structure things for us so that we know where our gaps are and whether we want to take those risks and exposures or insure them. So, yeah.
I mean, I've mentioned this probably too many times. People get bored of it on the podcast, but I always resonates with me that this thing of me being asked as a business owner how much coverage I want for certain elements of my insurance, and the answer is I don't know, because I don't know what a typical claim looks like. So, what's the typical claim for D&O? It's a person that runs a headhunting business. I don't know. Do they happen? In what circumstances? And it's that classic thing of it's being turned towards me, and that's where a broker would be hugely beneficial, because that's where they add that value.
Totally.
Yeah, completely. Something that we talked about before when we previously spoke was about you're a tech forward business rather than necessarily an insurtech. Would you say you're an insurtech? Would you say you're something else?
We spoke about this on the phone. I remember this. I knew this question would come up. Okay. I definitely consider us an insurtech. We'll start there. I also consider us, I consider Armadillo as operating in the intersection of insurtech and proptech.
Yeah.
To carrier partners, even though home warranty is not necessarily, it's not an insurance product, it's a service contract. We have two insurance carriers that are underwriting the risk. Fundamentally, it's an insurable risk. Otherwise, we probably would not be in business in a few years, but it's an insurable risk, high frequency, low severity, predictable, as long as you have the right loss control mechanisms in place. Definitely insurtech. PropTech, we sell our product mostly through real estate agents, real estate platforms, digital platforms. We're certainly a PropTech player. But ultimately, those labels, they're great and all of that. A message I would send to investors, because I think this is relevant to investors, is that we're building a great product and we want to build a profitable product and a sustainable business. And I think whether it's insurtech or PropTech or whatever tech, we are definitely tech forward. Our technology is all built from scratch, in-house, and it's the best in class and in industry. And we don't have any legacy systems in place. So there's a lot of value being built there. And I think we're doing things smartly. So we're building a product that's profitable and want to make sure that we focus on profitable distribution channels. So, we like insurtech. We go to every conference or that we can. We go to some PropTech conferences, but quite honestly, we go to many more non-insurtech or PropTech conferences where we can attain the right types of distribution partners.
Yeah.
So I guess we are an insurtech, but
yeah. I mean, the labels are kind of a bit meaningless anyway as well. We call some businesses insurtechs, which are, an insurtech is an MGA, or the new carriers are called insurtechs, but they are, for all intents and purposes, insurance carriers. And then I think where it's interesting talking about the business like yourself is just, we're talking about insurance doesn't distribute itself very well, and we're also talking about how insurance is pervasive in every part of our lives. So it's natural that a business is not going to necessarily sit in a pure insurance play, because it sort of depends on what you're trying to cover. That might not be the best place to put it, and therefore it might not be the best sort of way to sort of describe a business in a snappy, made up word.
True. I'm going to open the door. So my dog, I don't know if you can hear, he's scratching the door. I'm going to open the door for him, because otherwise you guys will hear the podcast.
Yeah, no problem.
It's a big dog.
What dog is it?
He's a big dog. He's a Australian Shepherd Poodle mix, on the bigger size, and he's sort of like a Sasquatch. He's now lying on the bed there. Really cute. Really, really cute.
Oh man, I'm jealous. My partner's allergic to dogs, so we can't get one, which makes me very upset. But I like her more than I'd like having a dog around, probably, which is good. Anyway, where were we? We were talking about the insurtech, PropTech, distribution models. You mentioned it there. You said distribution models. Wanted to talk about that. It's really varied, isn't it? You've got multiple kind of lines. Is this part of finding the right path? Are you going to narrow that distribution over time? Is it narrowing already?
That's a great question. We're selling one product, and we're selling it through different distribution channels. So as long as we don't have to change the product significantly or the delivery model significantly, it's okay. We're in a good place because we can try different things. It is definitely, as a startup, we believe there's a lot of opportunity in distribution channels that no one has ever either looked at or cracked from a competitive standpoint. So we're trying new things. We're also doing all things that we know work. So we sell the product through real estate agents. We have sales reps. We do that. We have a better product than our competitors. Real estate agents are seeing that and they're converting. They're starting to sell our product, and that's great. And we knew that would work. Another channel, and this is a really important, probably the most important channel, is the insurance channel for us. We think that our product is a great addition to any agent, any broker, all the way up to a carrier, homeowners carriers. We know other home warranty companies looked at that space, are looking at that space. None of them have done it right. And this is probably the most important thing that I could say. If any insurance professional is listening today, we're the only company in this category that comes from within the space and has thought deeply about how we can deliver for agents. The nature of the relationship of a brokerage with their client it's a long-term relationship. It's not like a realtor. You're selling a home. Maybe you'll see them again in their next transaction, but the broker has an ongoing relationship. That's why we removed 80% of the exclusions. That's why we made the product itself so much more consumer-centric. The product is more expensive, but it will deliver for those clients. So when we talk to insurance brokers, for us, it's not home warranty. It's another risk management tool that they have in their toolbox to offer alongside homeowners or alongside other lines of business. And I think that we have a huge opportunity in that space, and that we're lucky that no other home warranty. Recently we saw one of the other tech home warranty company out there writing an article on a PNC magazine, and it's like it makes me laugh. It's like, you guys, I'm looking at the product. It's like it's not going to work. It's not going to work. You have to understand that when the consumer files a claim, you need to deliver on that claim, because ultimately it'll come back to the broker, and the broker wants the consumer to have a great experience so that they can use that opportunity to say, that's great, I'm glad we got you that tool, and by the way, you should think about an umbrella coverage or something else. So we that's another channel. We think it's going to work. It's still early days, and I think we're doing very good. We hired Liv Kaufman, who I mentioned before, our VP of I don't know if it was before recording I mentioned her or not. She's our VP of insurance and partnerships. She comes from she was an independent agent. After that, she worked for Openly, the insurtech carrier, and she is one of the most wonderful individuals. She's authentic. She believes not only in our product but in the independent agent and their role. And I think we're going to do some great things there. And then there are a few other channels that we're not publicly talking about. Those are the channels that other home warranty carriers have not thought about, have not touched. And those channels will sort of keep under the wraps for the time being. But it's also, like you said, it's a test. And as stewards of our investors' capital, it goes back to your question, which is it sort of see what works? It is. So it's our job right now to double down on the things that work and quickly cut out the things that don't work if we know they're not going to work for sure. So far, we've been fortunate that I think most of the things that we've tried we're seeing very, very good early indicators, but it's still early days, to be fair. Of
course. Yeah. I wanted to ask about timing as well, because, we talked about, leaving the safe, secure job at AIG. Why was now the right time for you?
So I have two young kids and a big dog, and we just bought a house. We bought the house before I left AIG. It was after COVID hit, before I left AIG. And I was already past the threshold of being very, very comfortable at AIG, salary-wise, and work-wise. I was working from home. It's great. So it was a big jump for me. And I sort of touched on why I fell in love with warranty, but it also ties into why now. There were people who basically said, Matan, we think you can do this, and we're going to be there. We'll be there. If you leave AIG, we're going to be there. It's going to be, we'll raise the money together. One of them was an insurance carrier. We're going to underwrite the program. So you had this sort of things aligning that made me comfortable enough to say, you know what, I can leave. I can make the leap right now. It was after COVID hit. So from a business perspective, we did feel that the importance of the home in people's lives has just become that much more important, and our product solves for easy living and hassle-free home ownership. a lot of new first-time homeowners, people who lived in cities were leaving the cities because of COVID and buying homes. A lot of people were moving to different states, new states they've never lived in, had no support system or network in. So we felt like it was a really good time. You touched on the 4% penetration rate. I touched on the distribution channel opportunity. So a lot of things lined up, and we felt like if there's ever a time, this is a good time, and we have a good chance at building a really good book of business, a really great asset. And yeah, so it's a combination of things, but hopefully that answers the question as to the time.
Yeah. No, of course. And I'm a big believer in that. I don't think there's ever an easy time. I'd actually done the same thing. I think when I started my my first business, I basically got my deposit for my house, and I was like, right, that's the biggest lump of cash I'm ever going to have to find, hopefully ever again, because I'll keep rolling it on. And I was like, once I was kind of ready to go, I was like, right, that's it. You never have enough money. It's never ever going to be the easiest time. But sometimes things play in. It's kind of interesting how COVID would have come into play. Now people are valuing their homes more because they're at home more. It's kind of more important. There's so much DIY going on at the moment.
Yep.
I won't bore you with my DIY stories, but that's been my coronavirus. It's just been basically me pretending I know the right end of a saw. I wanted to. We touched on funding, and this probably going to be my last question, because I know we're tight on time. You took on some outside funding. At what stage did you take the business to before you did so? And was that was that part of your thought process going into the launch? Was it right, we're going to take outside funding at this point?
Yeah. I think I was one of those very fortunate individuals, now an entrepreneur, where that initial tranche of funding was not as hard to get as a lot of entrepreneurs face. It was nothing special about Matan. It was the right time, right place. I did have a great experience from AIG and good credentials, and a co-founder who's built 2 businesses before and sold both of them to Fortune 50 companies. So that made it easier to raise that initial tranche. So I didn't have to leave AIG, build a business, and only then raise the money. Left AIG and very quickly raised capital. I get paid less than 50% of what I got paid at AIG. I have my skin in the game big time. For the time being, we're probably not making enough money to support the lifestyle that we need as a family living in New York with 2 kids and a dog.
Yeah.
But yeah, I was in the best possible situation where I didn't have to spend a lot of my time thinking about fundraising and trying to figure that out. And then late last year, we had another round. We're not yet publicly disclosing it, but incredible investors. Also lucky in the types of investors that came in. It's a very simple cap table and extremely strategic investors. Unbelievable. And we want to continue that. So as we go through our path from a fundraising perspective, if we need to raise more money, which I'm assuming we will at this stage, it will be from capital providers that can help some part of our business beyond just providing money, because we feel like we're in that fortunate position where we can sort of go for that. And we also feel like the interests are more aligned, and the chances of success are greater when you do that. But yeah, I didn't jump off of AIG, go homeless, and then last minute get capital infusion that got me here. It was a very smooth transition.
Yeah. Well, I'm not going to have any sympathy for you if we talk again. You tell me you're having a hard time, because it sounds too smooth sailing. But no, well, that is the dream scenario, isn't it? But clearly the product and the business you're building is warrants it, because they don't give that away. Funding's been tricky, I think lately for a few people. But it's interesting what you say there as well. Like, it's not, we've been lucky to have a couple of VCs. Some of them I know that on the podcast, and even they've been transparent and said, look, there's quite a lot of money out there, so it's not just about them investing it now. It's like, what else are they going to bring to the table for you? What is there anything specific that you think you'd help for? Because some people look for kind of help with like like talent acquisition. Sometimes it's kind of distribution plays. Is there anything specific you look for in your investors from that perspective?
Yeah, most important is distribution. At this point, talent is always huge. And you and I spoke about that. We just hired our CTO, and that was such a long process. From a VC investor, that's not typically the first thing we ask for, but we do ask them who helps their other startups, and that's how we got your name. But no, distribution was the first and foremost. Any technology that can lead to an unfair competitive advantage for us. We have one investor who provides us with that. We have proprietary data on every single appliance type, every single model type, and that is huge. That's one investor. But our latest investor is an incredible distribution partner, and we're looking to grow that relationship. And I think in the future that will be the sort of the pecking order. It'll be distribution, technology that creates some sort of an unfair advantage, if relevant. And then there might be a few other things like liking the people. Like investors is also out there. We're very fortunate with the latest set of investors. Actually, with every single investor, unbelievable individuals.
It's amazing and important to me. I looked at the investor community from the outside looking in before I got to know a few during working with startups, and I don't know, it's like this sort of world of mystery sometimes, but actually you get to it, some of the most personable kind of people that are like really approachable, happy to kick ideas around, even the really early ideas as well that kind of are barely an idea. And it's just that it seems to me that the people that are really good in the space are just inquisitive, open-minded individuals but they've got enough of an ego. We don't have to flatter the community.
You know what I love? I'll tell you. I love the ones that were operators at one point, because it's less thesis based. And thesis is really important. Don't get me wrong. But the discussions that we've had, especially this one investor that just came in, and specifically the individual who we've been working with very closely, who's on our board, he comes from a business that was acquired. And he was in the business. And, when you have those discussions with this individual, even though he's an investor, I personally really appreciate the practical sort of discussion of how do we figure out distribution. We just we go right for the point. It's not like that hyperbolic of if you get your footprint in the home, then you can sell more stuff. Really important, but ultimately it's the practical stuff that's going to drive revenue dollars, and it's the practical stuff that's going to lead to great loss ratios. So I'm usually biased towards that, but I've seen some of the most smartest people in different VCs. They're just absolutely great.
No, I completely agree. I'll be conscious of our time, and I think we'll wrap it up there, because that's been a great conversation. So suffice to say, thank you so much for being a guest. And what's the dog's name?
Toby, knocked on the door right in the middle, Toby. I told you not to bother us when we were recording.
Thank you, Toby, for being part of it.
Pet Armadillo right here.
It wouldn't be a podcast if we didn't have some sort of interruption. And a dog's one of the cuter ones, so it's usually just an Amazon guy turning up with the delivery. So look, thank you so much. I really appreciate your time. Really excited to see what you guys get up to, and obviously, I'm looking forward to getting stateside pretty soon. So we'll have to meet up if we can.
For sure, Alex. Thank you so much for having me, and looking forward to build a relationship.
Great stuff. All the best. Take care.
Yeah.
Bye.
Bye.